it's a policy decision so far by the PBOC and others to manage the speed of the move rather than kind of put a line in the sand somewhere. I mean, Bank of Japan put the line in the sand, right, at dollar, 145, 150 almost a year ago. I don't think the PBOC is thinking that way. They know they've got a lot of policy challenges to manage in that economy, not least, well, not just the PBOC, but all policymakers have to manage the property sector issue in particular. So I think it's more about managing the extent of the slowing. And they're probably not happy with that. Yeah, we expect more measures to kind of come in. But, yeah, it's going to be hard. We still think dollar CNY has got upside. This growth picture just isn't getting very good. And every time you get some weak data like we got last week, you can count on there being some nice headlines leaked out in the media over the next few days about what the policy authorities are doing. But it always kind of underwhelms, right? The latest news over the weekend is that Chinese policy authorities have encouraged the banks to lend more. I mean, lower rates and an appetite for banks to lend, that's a necessary but not sufficient condition to actually get the lending going, right? I mean, consumers and businesses sit there and say, well, rates are lower, but we don't have so much confidence in the economic outlook that we want to borrow for new projects or for new spending. So that's a bit of a challenge. We think that the Chinese currency's got to get cheaper still. You've also got the geopolitical stuff in the background where foreign direct investment is historically poor in China. So RMB weakness, more or RMB weakness is what we expect to see.
Yeah, that's interesting. How much more weakness could be in store? Because I thought the red line was 7.32.
Yeah, it's hard to know where red lines are when, I mean, look, no country, not just China, but no other country really wants to set red lines out either and take on the FX market, such a big liquid market that trades 5.5, 6 days a week. So I'm not really sure where that is. I think they're just alarmed at some of the pace of the moves, and certainly investors have been getting very excited. It's also a backdrop where, the market wants to be long dollars, right? I mean, it's not all a weak CNH story. We've had 3 weeks now of falling equities, rising yields. It's a very positive US dollar environment. So the dollar side of it's doing a bit of the work too. So from a Chinese policymaker point of view, they're probably less worried about dollar CNH levels and more about where the CFETS basket sits, where the trade weighted RMB is. But as I say, I don't know that they've even got a red line in mind. They're trying to manage it and see what the situation is. And maybe the PBOC is waiting for central government to do a bit more on the property side to enable developers to get a bit easier financing to calm down that sector. Then you get some confidence in the economic outlook. Then maybe you do get firms and households willing to borrow. Maybe that's what they're waiting for.